Hello, my friends. Today, I want to talk to you directly, heart to heart, because I am seeing a dangerous trend out there that is targeting people exactly like you, people who are retired, people who are about to retire, and quite frankly, people who are feeling the squeeze of this economy. You are living on a fixed income, you are watching every single penny, and suddenly an unexpected bill pops up. Maybe it is a higher than normal utility bill, a quick fix on the car, or a copay at the pharmacy that catches you completely off guard. You sit there at your kitchen table, looking at your bank account, and you feel that tightness in your chest. That is fear. It is the fear of running out of money before your next Social Security check or pension payment clears. It is the fear of an accidental overdraft fee hitting your account and taking $35 of your hard-earned money for absolutely nothing. And right when you are feeling that vulnerability, you open your smartphone or you look online, and you see an ad for something that sounds like absolute magic. It is called Credit Genie. The name itself is designed to make you feel like your financial wishes are about to come true. They tell you, hey, do you need $50, $100, or maybe $150 right now to bridge the gap until your next check arrives? No problem. No credit check, no hard inquiry on your credit report, 0% interest, and no late fees. When you hear that, you think to yourself, wow, this is the answer to my prayers. It is not a payday loan, it is just a little boost to get me through the week. But I need you to listen to me right now. Stand up, look me in the eye, and wake up to the financial reality. There is no genie in a bottle looking out for your retirement portfolio. Let us pull back the curtain on how Credit Genie actually works, because what they do not scream in their colorful advertisements is exactly what can bleed your fixed income dry. First of all, they say there is no interest. Technically, that is true. They do not charge you a traditional annual percentage rate like a credit card does. But do you think they are running a charity? Absolutely not. Instead of interest, they hit you with fees. And when you calculate what those fees actually mean for your wallet, it will make your head spin. To even see if you are eligible for that little $100 cash advance, you have to link your primary checking account to their app. And to maintain that connection, they charge a recurring fee. It can be $4.99 monthly, or in some variations of their accounts, $3.49 biweekly. Think about that. You are paying a recurring fee just to keep the app linked to your bank. And here is the kicker that trips up so many trusting people. Paying that subscription fee does not guarantee you will even qualify for a cash advance. I have looked at the data, and there are countless stories of people on fixed incomes who paid the fee, got denied the advance, and were told to try again later, while the app kept pocketing their monthly subscription money. That is a direct hit to your pocketbook for absolutely zero benefit. But let us say you do qualify. You are in a rush at the grocery store or the pharmacy, and you need that $100 immediately. If you want that money deposited into your account within minutes so you can actually use it, you have to pay an express delivery fee. We are talking about $5.99, or sometimes as high as $12.99 just to get your money fast. Then, when you go to check out, the app prompts you to leave an optional tip to support the service. Because you are a good, honest person, you might feel obligated to leave a few dollars. I understand the fear that drives people to look at these options. When you are retired, you feel like you have fewer options to generate quick cash. You cannot just pick up 10 hours of overtime next week to cover an emergency. But using a cash advance app like this to fix a temporary cash flow problem is like putting a tiny bandage on a wound that actually requires a real strategy. It creates a vicious cycle. You borrow $100 this month to pay a bill, but next month your check is $100 short because the app took it back, plus fees. So what do? You open the app and borrow again. You become trapped in a loop of paying fees just to access your own income a few days early. So, what is the actionable takeaway here? What should you do instead if you find yourself in a tight spot? First, I want you to step away from the App Store. Do not download Credit Genie, and if you already have it on your phone, I want you to go into the settings, disconnect your bank account immediately to stop the recurring fees, and delete the app. Second, look at safer, traditional alternatives that actually respect your financial health. If you belong to a local credit union, go speak with them. Many credit unions offer what are called payday alternative loans or PALs. These are small dollar loans designed specifically to help people bridge temporary gaps, but they're heavily regulated. The interest rates are capped, the fees are minimal, and they actually report your positive on-time payments to the credit bureaus, which helps build your credit score safely. Credit Genie does not report your positive payments to boost your score, so it is doing nothing to help your long-term financial standing. Third, look into true emergency fund building, even if it is just $5 or $10 a week. I know it sounds small, but having a physical cushion of just $200 or $300 sitting in a separate, traditional savings account can completely eliminate the panic that makes predatory apps look appealing. Your retirement should be a time of peace, security, and dignity. You worked too hard for too many years to let an app chip away at your financial freedom $5 at a time. Protect yourself, protect your hard-earned money, and remember that if a financial tool sounds too good to be true, it always is. Stay safe, stay strong, and take control of your cash flow today.